This is lifelong information. As long as you're going to be residing in the state of Michigan, this is good information no matter where you live.
What's going on, everyone? Andrew McManaman here with Living in Michigan, and today I have a special guest so we can break down a little bit more about property taxes because that's always the biggest question. So today I have Christine Lucian, who is a Level 3 Michigan Advanced Assessing Officer, and I'm just glad she was able to sit down with me and just go over what questions people actually have. So Christine, thanks for joining me today.
Absolutely.
I just want to know, one, why you got into this and what exactly do you do briefly?
I got into this when I was 16 in high school. I was in a lot of architectural classes, and I did a co-op program in high school, and I got into the assessing department in Shelby Township, and I went off to OU, and they called me when I got out of college, and I've been doing it now for 12 years. So the rest is history. I've enjoyed it all this time. And what we actually do is the state, Michigan Department of Treasury and State Tax Commission, they hold us responsible for valuing all the property within a community. And we deal with land divisions, land combinations, property exemptions for nonprofit, churches, things like that. And we help with people in poverty, try to afford their tax a little better. And we wear a lot of hats. We've got to know zoning requirements, building requirements, and you just have to be well-rounded and know a lot of things. But I enjoy it. It's a fast-paced job. I'm always on the go. I have to know so many things, and it keeps it interesting. And I'm always learning something new. We're always getting new laws, and things are always changing, so it really never gets boring, even though it may seem boring. It's really not. So.
Well, it sounds like you have a full plate every
Yes.
single day.
Yes.
So in terms of property taxes, what's a common scenario that people are coming to you just ripping their hair out?
So usually it happens the year after they purchase. If you guys had a closing in 2022, you're going to get a surprise on your summer bill in July. We do send out an assessment notice in a couple weeks that's going to let you know ahead of time what your new values are going to be. And most communities will have an estimate of tax increase on there for you. But usually I get a call too late in the summer, after the bill goes out, that it went up thousands of dollars. So that's really tough for me because I always feel for the taxpayer when that happens. But it's pretty common that people can't believe the increase. The old owner, if they've lived there a long time, their taxes could have been, much lower than what the new owner is paying. So having to explain all that and explain the laws to the taxpayer is something that I take really seriously, and I, want to help them as much as I can. But the taxes go up after you purchase a property. It's just Michigan. We had a law in 1994 called Proposal A that created that taxable value uncapping. That's what it's called, an uncapping, where your taxable value becomes equal to your assessed value. And your assessed value is half of market value. So the year after you close, those two figures will be the same, and long gone is the prior owner's tax rate. It's just, so.
And I think that's what a lot of people don't understand when they're looking at that, because I have clients myself who are looking on Zillow, who are looking on listings, and they're like, oh sweet, the taxes are going to be $1,500, and the owner bought it in 1945.
Yeah.
And, okay.
Yeah. So that happens a lot. I get calls even really late into the year in November when the winter bill comes out. And I really feel for those people because they found out way late. And another thing that happens, it depends on the mortgage company, but I found that maybe 18 months after closing, then they get their mortgage escrow shortage letter in the mail. And then it's, they call me up. Why are my taxes so high? Why is my mortgage going up $300, $400, $500 a month? I can't afford this. This was not what I planned for financially. And I feel really bad for them. I've purchased homes, and what your affordability is at closing is what you expect to be throughout your ownership, and it's just not the case. So really excited to be able to tell people that, about that and what's coming, so they can be more prepared and maybe save a little extra money.
Right.
Yeah.
And I think so. Transitioning into that, like when we're talking knowing and just knowing the knowledge that these buyers need to know.
Yeah.
How does that work with the assessment notice process? What is that exactly, and what should they pay attention to?
So, an assessment notice is an official state form that gets sent out to every property the end of February. If you don't get it by March 1st, I highly recommend you call the community and get another copy. Have them email it, pick it up in person. Things get lost in the mail. The reason I'm saying that is because it's time sensitive. Number one, it says this is not a tax bill on the top, and naturally people either put it to the bottom of their mail pile or they throw it in the garbage. The problem with that is we have the comparison of your 2022 values and your 2023 values. It's showing you the difference between the two, and most communities will have an estimate of tax increase or decrease on that notice as well. So it'll be able to tell you exactly an estimate of what you can expect from the prior owner. On top of that, it's going to reference, was there a transfer of ownership in the prior year, or was there not? If there was, you can expect a bigger tax increase for sure. The most important thing on this notice is the bottom. It tells you the appeal information for the March Board of Review sessions. It tells you the dates, the times, the location, how to make an appointment. A lot of places now will allow write-in appeals. You can write a letter if you don't want to go in person. You are required to provide evidence. The state of Michigan says the burden of proof is on the taxpayer to provide evidence to prove that the assessor has the value wrong. So keep an eye out for that notice. It's coming up the end of this month, and don't ignore it, and don't put it in the bottom of your pile, because the meetings are going to be taking place the week of March 13th. And if you think you have a fighting chance on getting your taxes lowered, you should definitely take advantage of it. New home buyers especially, because we're starting over with you this year with your starting taxable value. And this starting value is going to affect you for the rest of your ownership. So the time is now for people who closed last year to appeal your value if you actually have, a solid evidence to provide. So.
And in terms of appealing, I know you said you can write a letter, you can go in person. I mean, would you say that if you really wanted to get it lowered or get the appeal process moving, would you do that in person and just really get it done? Or do you think there's really much of a difference?
Here's the thing. The Board of Review is a panel of 3 community residents. They're appointed by the local board, and they are trained by the state of Michigan. So they're regular people. They're a mediator between an assessor and a taxpayer. They do not work for us. We cannot tell them what to do, what decisions to make. They are there for you to plead your case to. So honestly, I think in person is a bit better. The human connection is something that has not been as important as we have social media and the internet. And just going to that board and letting them know, this is the homework I've done, this is what I believe. Sometimes I have people too, if they have financial troubles, you can explain your situation, and it just comes across a little bit more genuine and personable when you're in front of that board doing your appeal. So you can do a letter, but I think the human connection goes further, and for that reason, I would recommend an in-person appeal.
And I almost feel like it transitions into our last point. So I can just bring that up a little bit just because I know we talked about this a little bit about how people, that connection is not there between the offices and homeowners. And there's just this disconnect here. So just realizing that you're people, you're an actual person.
Yeah. Yes, I'm a real person. I have a family, friends, and a life, and all the other assessors are as well. We're a bit misunderstood, and that's kind of why I'm here today, is to end the negative stigma around what we do. We are regular people. We own homes. I've personally had my taxes go up thousands of dollars with both of my home purchases. The only difference is I was ready for it. It's something I do every day. So we're just regular people. We have to abide by all the same laws that you have to. And we're here to help you. If you call and you're kind and you're genuinely wanting help, we're happy to go into depth and answer all the questions so you're comfortable. Don't be scared to call your community, because I think that is a problem. Be the squeaky wheel, get your questions answered. You're a taxpayer. You need to feel good about the money you're putting out, that you're required to.
Yeah, and I think just that disconnect, like I talk about, because I see it too, because I always recommend clients of mine to go to those offices, because most times if you go in there and say, hey, I'm new to the area, I'm buying a home here, they just give you this bucket full of resources saying like, here's some places near me. Like, it really gives you some insight on the areas you're moving to.
Yeah.
And people just don't do it.
Yeah. And for out-of-state people, it could probably be much more overwhelming coming into a community that you're not accustomed to. So definitely talk to people that, work there. And that brings me back to homesteading versus non-homesteading. I'm not sure if that was something that, you've been dealing with your customers.
Yeah, so that's definitely that. I made so many videos about property taxes, non-homesteading. What's this zero mean? Why is it 100?
Yeah.
I mean, what it means even for rentals versus owning.
Mm-hmm.
So I mean, you could touch in on your perspective on what homesteading versus non-homesteading is and the effects. Really.
Yeah, I mean, there's a lot of different things that go into it. Like, for instance, duplexes. If you live in one unit and you rent out the other, you're eligible for a 50%. In most cases. Rentals are obviously a 0%. You're paying 18 mills of school operating. That's the max tax savings. In some communities in southern Macomb County, the tax savings is much smaller for rentals versus non-rentals. But you get one Michigan residence in the state, and I haven't done an official percentage, but if I had to make a professional guess, I would say homesteading a property saves you about 40% on tax, and it's pretty significant. I've seen it cut people's bills in half. So people coming from out of state need to be careful. The form is asking questions about if you own property in another state, have you ever filed a tax return as a non-resident of Michigan, and how you answer those questions is going to determine your eligibility moving forward. So Homestead is a great tool if you genuinely live in a property as your one and only primary residence. So. Okay.
So if I'm a buyer, let's just say, if I'm an out-of-state buyer who doesn't know anything about Michigan, and I'm looking at a listing and I want to buy this $250,000 house or whatever, and it has the taxes on there, how would I go about calculating that, like, briefly? Like, if you had.
Would it be a primary residence or rental?
Primary.
So if you're looking at buying a property, I highly recommend you call the assessing department in any community that you're going in, and you say, hi, how are you? If I buy this property, what will my taxes be next year? There are so many instances where I wish people would do that, because in these real estate transactions, we're the last person to know that your client was even interested in this property. You've got mortgage lenders, title companies, realtors, inspectors. All these people know that this client, this person wants this house, and I'm the last to find out. I find out when the deal's done. You guys have done the closing. And at that point, I can give you that information, but it's not helping you to make an informed decision as it would if you called me before. Another thing is call the community, talk to the building department. Are there any outstanding permits? Talk to the code enforcement. Are there any violations that need to be taken care of? Treasury, are there any delinquent taxes? Assessor, what are the taxes going to be? So communicating with the community before you close is preferable. But just ask us, how can I calculate my taxes? What are they going to be after I buy it? And we're happy to calculate that for you.
Do they ever give like a way to calculate it yourself, or do they typically just kind of give you a number?
So the kind of person I am, I give out formulas because I want people to be informed. Our formulas are the same no matter what community you live in the state. It's taking the taxable value and multiplying it by your local millage rate. That's the formula. The difference where it's a little harder for people who don't do this every day is which number am I using? Now, I recommend using the assessed value. So even if the taxable value is much lower than the assessed value, that means you haven't closed yet and the new calendar year has not arrived yet. So it's always safe to use the assessed value. And if you really want a high estimate, so you know you can afford it for sure, use your sale price. Divide your sale price in half, multiply it by your millage rate. Every community has multiple millage rates. You know, I have communities I work in that have 4 school districts. They all have different millage rates. And they all have a millage rate for homestead and non-homestead. So make sure that if you are going to do that formula by yourself, get the right rate for your district and for homestead versus non-homestead.
I know that's a lot of information for people, but really just pause this, rewind it, and just listen to it and break it down, because I think property taxes is so crucial for affordability.
It is. And I'm an open book, you know, anytime somebody needs help with a calculation or anything like that, I'm happy to help. It really, for me, it's really simple. It's black and white on how we do it. But for somebody who doesn't do it every day, it's very overwhelming. I don't know how to change a tire. So when I have people come to my counter and they're apologetic to me for not understanding me or not knowing, I'm always super kind and I say, oh, you're fine. You're a nurse. I don't know anything about medical.
Right.
And I would hope that if I came to your job that you wouldn't make me feel inferior or bad if I don't know anything about that. So I don't expect you guys to know everything about this. So I'm happy to help and it's not a bother at all.
Just off the whim here, for people who just don't really know anything about property taxes, what would be the number one piece of advice you have for them?
Oh, I just really feel for people who go through an uncapping. So if you are planning on buying a property, I don't care if you call me 5 times in a week with 5 different properties. Find out an estimate of tax, or at least do that calculation formula with your sale price and the millage rate, because taxes are different in every community. The millage rates are what determine your taxes. The value is determined by the market. So, you know, you could have a $50,000 2-acre lot in one community versus another. The taxes could be thousands of dollars difference. The millage rates are key. Some communities like, you know, Clinton Township, Warren, down there, their millage rates are a lot higher than like northern Macomb County. Obviously that comes with, you know, all the things you're paying for. So just do your homework, be an informed buyer. And I think that you'll have a lighter heart and be, you know, not as surprised. So.
And for people who have questions about all this stuff, what's the best way for them to get a hold of you?
Instagram, the Michigan Assessor, or the miassessor@gmail.com, and I'm happy to answer anything. The reason I'm here is because I've been doing this for 12 years, and the amount of people that I have had in front of me or on the phone that are just simply uninformed, it's, you know, overwhelming how much they don't know and how much they could know. And this is lifelong information. As long as you're going to be residing in the state of Michigan, this is good information no matter where you live. Whether you buy a house in Mackinac Island or you're in Grand Rapids, it's the same information. So it's good for everybody to know.
Sounds good. Well, I appreciate you sitting down with me today.
Absolutely.